Let's talk about PCE, personal consumption expenditures. Let's talk about another multifamily syndication in some trouble. And we will talk about housing market getting even more difficult. Folks, this is actually a recording for the Daily Financial News for Friday, June 30th. If you don't know already, I record 5 sessions live, but then I do take off Friday and Saturday. I like to make up for it, though, and record the videos because, again, I still do the work. I just don't record the videos on Friday and Saturday. So what are we finding? Let's first go to a multifamily syndicator. This one is Tide Equities. Folks, Tide Equities is a syndicator that was crushing it for a long time. They were doing a lot of value add multifamily deals. Unfortunately, in the Sun Belt, it has become a problem to be a multifamily syndicator doing value add because the lending environment has changed. They now are on the process of issuing capital calls to their limited partners. Folks, if you don't know what a capital call is, it's basically, hey, we need some money to keep this asset. And if we don't get some money, we might lose it. Again, folks, one of the things I think that is actually very good about Tide Equities is they're going early. If you've been following me for any length of time, you know that I have been shouting from the rooftops that there's pain coming. I tried to stop you from entering brand new LPs with bad debt structures. But the good thing for Tide Equities is they're asking for the money early. It is my firm belief that if you are a syndicator or a GP and you see a potential for cash, ask early. You want to be the first, not the seventh, because at some point your LPs are going to say no mas, and they will not give you the money. So again, I think Tide Equities is actually going early and asking for it. So we will see what happens there. Realtor.com is talking about house hunting getting harder. Yes, folks, something happened on Friday. On Friday, we learned that active inventory is now down year on year. Reported by Realtor, reported by Logan from Housing Wire, and many others. We knew this was coming. New listings are down 27, 28%. This is not good. This could lead to problems in the second half. Again, having active inventory down year on year, this is not good. One of the things, again, I'm starting to share more and more is I think we actually need higher rates. I think if you want the housing market to correct itself, it's not going to be fast. There's nothing that can fix the housing market fast. But one thing that will nudge it along is higher rates. Now, let me be clear. I am saying that higher rates would help. I am not calling higher rates. Hopefully that makes sense. It is still my belief rates float down to 6%, which again won't be good because it'll spark demand and no supply. But maybe Jerome Powell, maybe the banks, maybe, whatever, maybe we'll see 8%. If we can get 8% mortgage rates for a couple of years, again, a couple of years, not a day, not a week, not a month, maybe the housing market could fix itself in 5 years. It's broken, folks. The housing market's just broken. It's just broken. The Fed did it, and we need time to fix it. Something else we should talk about is PCE. PCE did come out on Friday. Net of the 4 metrics, 3 of them hit target. 1 was below, and the one that was below was frankly the one we wanted if we could pick one. So the headline numbers were 3.8% year on year. That was expected. Headline number expectation month on month was 0.1%. Again, hit expectation. Actually, the core numbers is one we're really tracking. We were expecting 4.7. We got 4.6. So again, core is starting to crack. And again, remember, the big part of core is housing, aka shelter. That doesn't really roll off till August. It's just mathematically baked in. But we're almost to August, right? It's July, whatever it is, 2nd. We're almost there. It's going to get better. So again, PCE core was 4.6, and then month on month was 0.3, which matched expectations. So again, PCE, personal consumption expenditures. Why is it important? Because it is the Fed's, favored gauge. If we were going to pick one metric to come in light or below expectations, it would have been year on year core, and it did. It came in at 4.6 versus 4.7. So a lot of good news there. Again, let's talk about inflation, because again, we got some annualized numbers in that. We got core goods, which is stuff. Remember, I tried to help you understand inflation. There's stuff that you ship in cardboard boxes. There's services, shelter, all of that, shelter. And then there's services, AKA wages. So goods, stuff, shelter, wages, services. Core goods, AKA stuff, came in at 3.2. Housing, folks, it's going to get better. Housing came in at 6.4. It was 7.2. It's not even rolling over yet in any real factor till August. And then core services X housing, this is a Jerome Powell favorite, 3.9. It was 4.4. So again, I believe the Fed is winning. I believe inflation rolls over. I have put it out there repeatedly, and I'll stand by it that CPI headline is 2.9 in a couple of weeks. If it's 3 or 3.1, great. I'm going to put my name on 2.9 and see what happens. As of right now, at least Friday, there was an 86.8% chance that I'm wrong. The smart money, the Fed futures, expect the Fed to raise in July. Simply not my call. Again, 86.8% think I'm wrong. I'm okay with that. And as you know on this channel, when I'm wrong, hey, I'll admit it. And sometimes I'll wear a shirt that says swing and a miss. But again, I'm not changing my call. I think the inflation number, we do get a jobs number this Friday, which will be interesting to watch. But yeah, lots of stuff going on. David Rubenstein, chairman of Carlyle Group. If you don't know who Carlyle Group is, think about it as an umbrella company that owns hundreds of other companies. He says he doesn't see a looming recession in the data. He thinks that there's trouble waters in real estate, but there's opportunities for buy and hold investors. Again, David Rubenstein is talking about buying real estate, commercial real estate, and just waiting. Folks, if you raised cash over the last couple of years, like I have recommended, you're going to be in a position where you can buy a great asset at a discount and just wait, because things will get better. Now, Rubenstein is talking about commercial, but the same goes for residential, small multifamily. Maybe there's somebody who overpaid for an Airbnb or a vacation home. There will be opportunity out there for you. And then finally, Stanley Druckenmiller, another billionaire, is outgoing. Guys, no housing price crash coming. We have a structural shortage of single family homes. Yeah, the crash bros are wrong. Go check out Stanley Druckenmiller for what he had to say. So again, folks, I normally do the daily financial news live 5 days a week, but I think it's important to catch up on the 2 days. So this is Friday, June 30th. Do me a favor, like, subscribe, comment, become part of One Rental at a Time. And if you're ready to do the work, simply buy my course, How to Get Started One Rental at a Time, $3.99. And this July 4th weekend, get 2 free $50 courses. Maybe it's the mastermind, maybe it's the buy box, maybe it's out of state, whatever it is for you, buy it today. Get $100 in free courses. Thank you very much. On to July 1st.